Welcome to TradingNBA.com. This is John's report. Is for the 26th, and what I did was I went ahead and marked the low there of the positive extreme that happened on the daily as we began the new push up. Clearly, we're doing just exactly as we expected as we're just approaching the 3450. Probably going to catch a little bit of resistance in between there. We're seeing a little bit of softness from short-term buyers as we go into this, but steady rise of DOC red has really created that separation between shorts, and that little uptick in shorts though can actually help in driving further. There's been pretty much a capitulation from shorts for quite a while here. There was some initial interest right there during the Democratic convention, and then as the Republican convention started, we saw a dramatic split and significant balance. So just not drawing anything into that, just the timing of it is significantly correlated. So we look at the same thing here. We have NASDAQ continuing. Now it had positive extremes from a little bit earlier, right about here, filled that one already, and then it created this new one that was right at this point for 11,528, which has the potential. It's just a question of how much weakness we can see from there, and if we get a crossover of green below red at that particular point. We can look at it from a power most standpoint. Again, there's been no crossover from the original buy since back over here when we first started the uptick, and the magenta came below, and that led to the up spread. And then as soon as we get those meeting points and the breakouts, that leads to new separations, just as it did here. We're going to move back to the mean right here, and then what we would look for is the next expansion. They've been much smaller now, so that's because we're getting into these lofty areas, and until that changes, we're probably just going to continue this back and forth a little bit with the general bias to the upside. Eurozone continued to be a disaster economically, and but as long as the U.S. has got the inconsistent lockdown policy, I think they're going to continue to float the euro because it still helps with exports and that. We're outside the range that had been the case for quite some time, last few years, and close enough to it that it wouldn't take much to pull back in there. In fact, we have the positive extremes that really kind of call for it to come back to that range right inside. So we'll just keep an eye out for that, because at the end of the day, the U.S. is just killing the Eurozone from an output standpoint. And again, everyone's going to be watching oil, because as soon as oil makes the move, then we'll know that there is significant demand and that supply excesses have been eaten up to the point where we could actually see some growth aspect from it. But until that takes place, it's still going to hover right around the same area, a little bit higher. This is pretty decent readings for potential bounce to break out. My expectation is still that they want to get towards 50, right in that range, still enough to not generate inflation, but to also make it profitable for those businesses that are involved in that. And that gold, that would be the impetus where you would see gold break out to the new highs. For now, it's just been basing at this particular point, having filled the gap range that was there and some of the positive extremes. Still has potential for a little bit more of a dip if it's going to fill all of those in this interim time. But we haven't dipped below the red line, so there's no real liquidation. It's just as long as that market keeps rising, you get a better return there than elsewhere. So from intraday, we popped up, ended up with our DOC spread, short signal, same thing here, power mode falling, magenta crosses above it, and then we ended up with a continuing cascade lower. And when we did get the magenta cross up, it was on lower Azure, and that didn't turn around until, well, right about over in this area right here where we first started to see a pop-up. What I was pointing out, though, on our Skype chat, too, here I have the, instead of the ABM, I have the long-short algo test, and what it's really representing as it creates a new separation is that when you have the short algo over the long algo, you are in a extended drawdown period, and it's not until that bases and or you have closes above the 23% do you ever see a turnaround beginning to develop. And in this particular case, we started with the setup right there, even though we were getting continued decline, and then finally based out right around here, and then once it popped back up, that was the beginning of the strongest push. And then of course it retested that, a little bit later on, but finally you got a turnaround of the long algo pointing to the upside. I mean, it doesn't cross delayed. I'm not looking for those crossovers, but what I'm gauging is the general bias of direction when you're having continuing dropping, short algo over the long algo. You're in a negative move, and it just lets you know that you've got to be more suspect on your longs and be tighter with stops in those cases versus when you're on an upswing with the long algo turning around. Having based that. It just makes for a much clearer position, even within getting your oversolds with DOC spreads, because you're going to get DOC oversold a lot, and you may even get, like in this case, P2 situation where you're like, okay, this is really improved strong, but in this particular case, you still had lower long algos. It had started to base. If we look at the actual numbers, it's helpful, so you can see down there at the very bottom. 3150, and that's where it began to hold, but then it broke down pretty immediately after that, and that led to that continuation, and we finally based at a lower where we finally got the pops above, and that's what I look for, and I'm putting that into the language, and that's going to be adopted so that a lot of these earlier buy signals will not generate a significant color change, other than that what they will do is they'll present themselves, and if there is a sell signal within the early stages of it, it will go ahead and execute that, just to prevent a lot of bouncing around. So there's two approaches to it. One, if you don't mind trading these small little moves as you get them, it's not a problem to do, as long as you understand where that general bias is. Plus, if you already know you're in a short bias and you get the pop, then as soon as you see steel dipping below cyan, it becomes an opportunity to short again, looking for a downside range. So two viewpoints on that, but it certainly is very helpful, and I think that something you want to look at for the broader trading aspect. It's going to be incorporated into our paint model, but just for those that like to know how some of that is derived and why the same signal may not trigger a buy where it does in another case, this is one of those reasons why it will do that. And it might seem confusing because it'll be the same, appears to be the same DOC reading, but as we know, it's really not the same condition. And that's an important thing to recognize, that this is the reality of markets, is that the dynamic changes, and while you may have similar readings in some cases, there still is a different dynamic, and we're able to see that utilizing all the indicator capacity that we have. As always, though, I will keep updating things like this on the Skype chat. Trade well, and we'll talk again later.